And good afternoon. Welcome into Market Talk for Friday, January 29th, 2021. A good afternoon to you. I'm your host, Jesse Allen. Thank you for joining us here today. MarketTalkAg.com. That's our home on the web. That's where you can find us. MarketTalkAg.com, Facebook, Twitter, Instagram, all at Market Talk Ag as well. Our great radio affiliates across the country, from the Dakotas down to Texas, including the Alpha Media Farm Network, our friends at KASM in Albany, Minnesota, KMA in Shenandoah, Iowa, and also the American Ag Network. We appreciate all of them for being our radio partners for Market Talk. Really excited for today's show. We had a great close to the week here with strong grain numbers today, and bringing on a very good friend of mine, an old friend of mine. You've maybe seen him or heard him on various programs throughout the country over the years. You can currently see him as a guest host on This Week in Agribusiness. Mike Pearson joins us here today on Market Talk. Mike, great to see you.
Hey, great to talk to you, Jesse. It's nice to have a story happening in the grain market that's given folks a lot to talk about.
Yeah, very much so, Mike. And I appreciate you take some time out of your schedule to join me here today. And it's always good to catch up with you. And this grain market, man, oh man, since that January report came out, even before that, I'd say the last couple of months, this has just been an impressive bullish market that I think a lot of producers and traders are just smiling at. What is your initial thoughts, just this market climate overall?
You know, Jesse, I think one of the things we're going to be wrestling with for a while in the grain industry, whether you're a producer, you're an end user, or you're just a trader, is what happened? What sort of set the stones in motion for this past year? The very idea that as we head into harvest in what is anticipated to be one of the biggest crops in history, depending on derecho damage at the time in August when we were chatting, we've rallied incredibly, really against all logic and reason, unless you look back at sort of how the USDA has been reporting the crop size in this country for the past several years. And I know a lot of really, really smart traders, Darren Newsom springs to mind, Ted Seifert from Zaner, have been commenting on this thing that's been going on for several years and anticipating this kind of a move. Now, it definitely came in with a lot of shock and awe, to use a phrase from the early 2000s. But at the end of the day, what's going on is we have a tremendous pile of money globally and domestically searching for a place to invest. And we're seeing the ramifications of that in the equity markets. We're seeing the ramifications for that in the property markets, at real estate, both farm ground and housing. And we're seeing it trickle its way into the commodities. So I think that's the underlying foundation of this massive rally we have going on. Is at the end of the day, farmers have assets, physical, real assets, which are often viewed as an inflationary hedge, and folks are looking for a reason to put money in there. What's exciting about this rally is that hey, we've got money that needs to go somewhere, has coincided with this fantastic demand story that's developed in agriculture. And it's the Chinese demand story is what's really been going on. You look at the past 7 days, we have sold 240 million bushels of corn to China in a week. I saw a report, it was floating on Twitter, and I didn't save the fellow's name. There's somebody, a trader, who had gone back and looked at USDA export data. Of the past 41 top single day export sales announcements coming from USDA, something like 17 have occurred in the past 2 months, really going back to December 1. The demand is out there. And when we look at the soybean demand, a lot of traders had clued in on the fact that China was going to be in demand for soybeans. Everybody knew that last year when they jumped down to Brazil and started buying grain in earnest, buying beans in particular, they were buying them out. And that's what happened. And of course, now we're in this tremendously tight supply scenario. We wait to see what comes out of Brazil. We knew China would be buying. The corn side, I think, is a little more surprising. We can talk about that a little bit in greater detail. China keeps buying corn in prodigious amounts. It's a lot of fun to watch, both as a trader and as a farmer, if you've got things to sell, Jesse. And that's what's so frustrating, I think, about this rally, is a lot of folks were selling off the combine into a rising market. In every year, most analysts and traders are going to tell you, hey, that's a good move. You're not paying storage. You're getting the grain unloaded. All of a sudden, you're reducing a lot of the risk on your operation for stored grain. You're reducing that price risk, and you're selling at a profit. But that was $1.50 ago. This thing has continued to run, and now folks are out of grain to sell because they followed a plan. The most disciplined marketer might well be out of grain by this point. And we don't know how much farther this rally is going to run, Jesse. I mean, it's a really exciting, nerve-wracking time for grain growers with products to sell. It's also really frustrating and nerve-wracking for a lot of our friends in the livestock and ethanol businesses, Jesse. That's where we're going to see this rally have a long tail. And I hope those folks are doing what they can to protect themselves as we get a little farther into 2021.
Yeah, and we'll talk about livestock and ethanol here in a little bit. I want to focus on that China demand first, and that's really obviously been one of the huge catalysts here as we've shrunk that carryout number. And you mentioned a lot of this fund money getting into the market, and we're record long in a lot of positions. And we've seen a couple dips of profit taking, but then we just correct and keep going higher. And you talk about all those corn purchases for China. Soybeans were the big deal there for a little while. It's really impressive to see this Chinese demand. And obviously, we take some of it with a grain of salt with China because a lot of it still got to be shipped. And how the Chinese are. I mean, that could change. Overnight they could cancel orders. And I think that's maybe something that's paused this market just a little bit. But overall, this Chinese demand story and where it's putting our carry out and everything else is very, very interesting to watch. It's almost like a perfect storm.
That's the best way to describe it, Jesse. I mean, it totally is a perfect storm. It's these factors have come together. And I think as we look at China on the corn side, even though their corn demand, or I guess I should say, the magnitude of their corn demand it caught me by surprise, caught a number of analysts by surprise. If we look back to this last summer, I think we can find reason in their purchases. The Chinese growing regions, particularly for corn and wheat, were flooded out last year. They had a once in a millennia flood event all of the early part of last summer. And when it comes to China, you mentioned taking data with a grain of salt. Obviously, their damage estimates coming from the central government there in Beijing weren't accurate. I think we can say with confidence, based on the amount of purchases China has made, that the damages from that flooding were far greater than they had let on over the past several months. I think that fact, combined with the idea that they have chewed through a lot of their state grain reserves. When we think about China, we think about a country who often has a year, 18 months, 2 years worth of grains in stockpiles around the country. And over the past several years, we've been hearing stories about how poorly cared for a lot of those stockpiles are. We've been hearing stories about how China has been auctioning off a lot of their grain in their national security stockpiles. And I think we've figured out that they're empty. Their corn stockpile is empty. Their bean stockpile is empty. And, wheat, to a lesser extent, they're more of a hand-to-mouth wheat buyer. But on those two main commodities, China's looking at this scenario. The government's looking and saying, hey, there's still price risk here to the upside. One of the most compelling things that we haven't seen quite yet is the lack of Chinese cancellations. You're exactly right, Jesse. Those of us in the grain trade know that when China makes a lot of aggressive purchases near a market top, we're going to expect to see a lot of export cancellations and attempts at rebooking at a future lower price. They haven't done that yet. And like you say, a lot of this is yet to be shipped. They've been buying very aggressively in the new crop marketing year. So that could very well change. If the Brazilian harvest gets off to a late but good start, if their truckers don't go on strike and they start getting beans to the ports, there's the risk that China could start cancellations. But they haven't yet. And when you look at what happened this past week in soybeans with the massive sell-off last Friday, coupled with the recovery this week, I think that recovery was in a large way buoyed by the fact that not only did they not cancel, they've continued shipments. And granted, this last week, export shipments were down a little bit. We're a little bit below expectations on sales. But at the end of the day, there weren't a lot of cancellations. So it was some real positive news. And that gives me some hope, though I do think growers in this country are going to have to be concerned as this Brazilian crop comes to market. The size of the crop is still heavily debated. You mentioned earlier, we don't know what's going on with the weather down there. We know they were dry. We know a lot of planting got in late. Some rains are coming through now. How's that going to delay this harvest? What are yields going to be? I've seen some really smart people make educated guesses, but the fact is we don't have a clue yet. And we don't know how that grain is going to work in getting shipped around the country. If we think back to this last year, China was really cracking down on a lot of exports from Brazil due to allegations, I guess we should say, of COVID-19 on the packaging, on the product itself, on the boat. They were finding ways to use COVID to scare people, not scare people, but cancel orders or at least defer shipments, delay shipments. And could they do that again? It's possible. China's taking COVID very, very seriously. And I think they are probably going to look at more aggressive testing coming out of Brazil.
I think they are going to look at that as well. And, we look at that safrinha corn crop and everything else. We'll have to see where things end up there. Now, you talk to a lot of other analysts when you're on This Week in Agribusiness and other areas and on Twitter and everything else. And, I've heard a lot of questions from growers in the countryside saying, we've sold our old crop beans for the most part at this point. We still have some pockets of sizable old crop corn sitting in storage though, and we've seen some guys look at selling some new crop beans. What is maybe the big one or two things you're hearing from analysts and traders about what these guys and gals should do with some of that old crop corn and or beans or new crop corn and beans, as far as maybe selling it and maybe making a little bit of profit, because these price levels are really an opportunity to make some profit right now?
They really are. And the next 2 months are going to be pivotal, because right now we are in a supply crunch. Of course, a lot of us who look at the markets over the past 2 weeks have been absolutely gobsmacked by what's happened in GameStop stock rather. We've seen it just go to the moon. It was trading at $20 2 weeks ago, and now it's at close to $300 last I looked, and the price has varied $100 a share every day. It's insane. But what we're seeing there is a tremendous short-lived squeeze. And that's what we're seeing right now in the commodity markets. We know that South America has a crop. We don't know the size. We don't know the quality, both of their primary soybean crop and of their safrinha crop, which will be going in the ground here shortly. Now, we also know that China has voracious demand right now. And so we're trying to navigate this. If the South American crop isn't as big as USDA was estimating, I believe their numbers right now are right around 133, 132 million metric tons of bean production coming out of Brazil. And they were the outlier. They were really high for a long time. They were the one everybody was kind of looking, going, gosh, what is USDA thinking? But now we've seen a few more agencies, particularly down in Brazil, come out and mirror those numbers to some effect. Certainly looks as though the Brazilian bean crop is growing, which heightens risk, in my mind, of new crop sales. If you like, and we've got to like where prices are at compared to where we were just a year ago. But if you're profitable right now in new crop beans, especially as we get a little bit deeper into February, I don't think there's anything wrong with pulling the trigger on some sales. I don't want to sell out the bin. If the Brazilian crop isn't there, this thing could get really exciting. I touched on the inflationary risks, and I don't want to beat the inflation drum too hard, Jesse. People have been fearing inflation since all the market interventions in 2008, and it hasn't happened. Heading into 2021, I'm more convinced that we could have a better scenario to see inflation explode. We've got Americans with $1 trillion more in their checking accounts in 2020 as of about November 2020 than they had a year prior. That's $1 trillion of hot money that is ready to be deployed in investments for a lot of those higher income folks who haven't been as impacted by the COVID pandemic as a lot of service working type folks. And they are investing. They're buying real estate. My little sister's looking at a place in Austin, Texas, and right now they say it's customary. If you're submitting an offer, you agree to waive the appraisal and to make up the difference in cash. That's the kind of frothiness we were seeing in the markets in 2007. Now we're seeing it in 2021 when the fundamentals simply shouldn't be there. We've got tremendous unemployment. We've got folks who have not worked in a year, and yet we've got this kind of frothiness in the economy. Frothiness can persist for a really long time. If we start opening the country back up and presidential administration shift, we definitely have an administration that's more gun shy about reopening than perhaps the Trump administration was. But regardless, if this vaccine or these vaccines are effective, we're going to see folks going back out, eating more, getting their jobs back. Waiters and waitresses will get back to work. They're going to start competing for real estate. This thing could really explode. And I don't want to tell folks to count on that. I don't guarantee it's going to happen. It's just a risk item that exists out there when all of this money is in circulation. This hot money, which is M2 on the federal charts, you can keep track. It has skyrocketed, and there's probably more to come with additional stimulus money, bailouts for various people. We're going to be running the printing press, and eventually that comes home to roost. Will it be in 2021? I'm not sure, but I think the conditions are in place for a rapid rally in real asset prices, which includes grains, which we're seeing. The big beneficiary as we get through 2021 could be livestock. It could really be cattle. When we think back to the last major inflationary period in American history, it was the 1970s. And for a lot of folks in the cattle feeding business, those were some good years. If restaurant demand picks back up, we start seeing folks get out more, we could really see this market take off. And if that should happen, a lot of times those rallies can be divorced from rational thought. And that's what we're seeing with GameStop. There's no reason to buy GameStop at $20. There's certainly no reason to buy GameStop at $340. And yet it's happening, because the money's out there and there's a thesis that that's going to go higher. I think that same thing could play out in the commodity trade, possibly in real estate, certainly ag real estate, $16,800 an acre sale in Northwest Iowa this past week. Things are getting hot. This could be an exciting year. I don't want guys to completely use up their early in the year, but at the same time, prices where they are, it's prudent to take some risk off the table and to get some sales on the books. And, like every analyst says, hopefully they're your worst sales, particularly if you're looking at new crop, corn and beans.
Well, and if anything, at least maybe give yourself the chance for some ownership back over the top and set that floor, because at least if you look at your own balance sheet, and I always say on the show, it all comes down to your individual balance sheet. But if you can fund the operation and you can, sell 30, 40,000 bushels of old crop corn and make 200 grand, and it's going to help you out, why not do it? And if anything, you get the chance to come back in over the top if the price goes higher. And if it goes lower for some reason, if we get a black swan event,
right,
then you're set. Mike, we're kind of touching on livestock there a little bit, and I think we should transition to that. We mentioned the COVID demand, and obviously that pent-up demand that we haven't really had with livestock. And cattle markets have just kind of traded in this sideways range for quite a while. We're trying to break out of it, hoping that we start get some demand and open things back up. But obviously, a rise in grain prices is going to affect cattle prices as well. And I still hear a lot of guys who are pretty bullish in this cattle market, but with caution. Is that kind of where you're at?
Yeah, that's the best way to put it. And I'm going to be really honest with my biases here. I'm generally always bullish livestock. It's an attitude that has cost me personally a lot of money when I'm trading. But I have a fundamental belief in the desire of people for quality protein. And so far, even though we see fluctuations in prices, even though the Holcomb fire and COVID were phenomenally harmful for the industry, at the end of the day, it didn't really change consumers' approach. They've been paying higher retail prices. We've seen choices come down considerably from middle of last year. That COVID 6 months immediately following the March outbreak, when things started shutting down, that was a wild card that I don't feel comfortable looking at necessarily on a chart when we're trading down in here. But I do think it's worth looking at from the perspective of how it impacted the supply chain. Longer term, I think the amount of focus that got put on the meat industry, and by this I mean the processing sector and the distribution sector of the industry, has come under a lot of fire. For the cattle producers who are out there today weighing the pros and cons of putting feeders in their lots, I don't envy them one bit. This volatile feed cost, the lack of movement to the upside really in live cattle prices has been frustrating. It's tough to make that justification. But I think, as you mentioned, we got the inventory report coming out at 2. In fact, as we're talking, I believe it should be out right now. I haven't looked at it, but I do anticipate we're going to see further reduction in overall cattle numbers in this country. I think last year's losses really spurred a lot of folks to liquidate some herds. And I think that's going to put some upward pressure on as we get a little farther. The key right now, there's 2 keys in the cattle industry. They've been the same for the past 6 months. The first is processing capacity. Can we see these processors continue to stay open? I saw a headline earlier this week. JBS is looking at giving its employees $100 bonus if they get the vaccine. So they're trying to figure out ways to keep those lines running at as fast a pace as possible, given all of the additional spaces and the additional, cleaning and all the other stuff these packers have to do for COVID. That's issue one. Can we keep killing the numbers that we need to keep this market current? Issue two is retail. I mean, we've got to get schools back open. We've got to get restaurants back open. And not only that, a lot of us in agriculture, when we talk about reopening the economy, we mean getting rid of government fiats, right? Not mandating that things be shut down. As we look out in 2021 and 2022, those government mandates are going to be lifted, but we are going to have a lot of people who have been profoundly impacted by the fear this past year of being in large groups, of being in open spaces with lots of air moving, restaurants, bars, etc. So my long-term question is, how quickly will those people come out of their homes and start going back to restaurants? And since we haven't seen an event like this since 1918, it's kind of tough to gauge how consumers are really going to react when things fully reopen legally. Will they reopen socially and civically as well? Will people actually go out? And that remains to be seen. But if they do, given the shrinking cattle supply, given the inflationary move to the upside, even if it's shorter or smaller than I'm anticipating, combined with more restaurant feeding, combined with finding uses for those higher value cuts of beef, it is going to trickle back down the line. But for folks looking at making that investment in feeders right now, I'm not expecting a big payback until we get to the second half, perhaps fourth quarter of 2021. Just because I think society moves slower than we'd all like when it comes time to reopen these things.
Well, we read each other's minds. I was pulling up that cattle inventory report as you mentioned it, and it looks like down slightly, 93.6 million head, slightly below the 93.8 million head on January 1st of 2020. And it looks like as well the calf crop down 1%. So slight reductions, maybe not as much as we thought, but still a reduction in that cattle herd.
Yeah, definitely a reduction. That is a lot smaller reduction than I would have guessed. So I would anticipate this could probably be perceived as bearish come Monday. We still have a lot of animals out there. We still got to keep kill rates up, and we got to keep this market current. I do think we've returned to currency largely in the cattle sector. We're seeing weights fluctuate. They've dropped substantially from that post-COVID lull. So we're making progress overall. I think the industry's doing what it needs to do. And we just need society to get back out there and be willing to pay $60 at a restaurant for a ribeye.
Yeah, exactly. On the hog side, kind of the same story with hogs. That COVID demand really has been kind of the issue. There hasn't been the demand out there. We've seen people eating at home, but it hasn't really translated into good demand. Domestically, we saw good export sales numbers come in this week. And also, with hogs too, we've seen that cutout value has been really strong. The cash price has been really strong. What are you seeing in this hog market? Anything to excite you, or maybe has you a little nervous?
So nothing that really excites me. It's tough to get fired up about hogs. I do think there's still excitement potential in that industry. We do know that China's protein availability is still way down from where they were in 2017. They've made aggressive moves to get their people to eat more poultry. They've converted some of the smaller hog farms into broiler operations. And maybe that's helping. I also think the Chinese are probably just going without pork and without poultry quite a bit. Eventually, that's going to change. We're going to see either China import more American pork, or we're going to see them really continue to ramp up their own herds. That could come back to benefit our industry again as we get into this second quarter of 2021. Longer term, I do have concerns here in the hog industry. When we think about what's going on with regard to feed, the vertically integrated folks are going to be largely fine. They have sophisticated hedging operations in place. I do worry about the independent hog producers that we still have. We don't often talk about the independent producers. They're a smaller percentage than they ever have been of absolute hogs raised in this country. But their supply chain is vital. When those plants don't have enough of their contracted hogs, the ability to plug in an independent producers and keep those lines running at full speed helps keep our numbers down. And those folks, I think, are going to really struggle, especially the guys who are used to walking the grain off their farm in the belly of their hogs. This is a year that strategy might kind of bite you in the tail. And it's probably worth exploring other opportunities for your operation. because that's where the squeeze is going to be. We're going to see that feed costs continue to erode the profitability on a per pig basis, and especially for those independent guys. When you look at what could be coming down the line with fuel prices, if there is an inflationary spike, everything's going to go up with it, including all of our costs of operation. And hogs, I think, are going to be less likely than cattle to benefit from an immediate upsurge in pricing. Cattle are a premium protein. Folks are going to be willing to write large checks for cattle. Maybe they just do it less frequently. With hogs, they don't have that same social cachet. They don't have that same ability to command people to walk into a store and say, I'll spend $18.99 on pork chops. That's just not there in society. So they're a little bit more naturally limited on the upside at the retail case. That's going to help keep prices a little bit more subdued on the board as we get into the remainder of 2021, Jesse.
Yeah, a lot of things to consider as hog producers and throughout that entire livestock sector. Mike, we've covered a ton here today. Any other final thoughts you have on this marketplace in general, or any advice you would give to any producers out there who are listening to the show today?
You bet. I do have a piece of advice, and it's one I've been sharing a lot with family and friends, and a lot of folks don't like to hear it. But that's in periods of volatility and uncertainty. There is a lot of thought behind getting out, whether that means pulling your cash out of the market. I heard from a lot of friends, either after the election or after the inauguration, they pulled their cash out of the markets. They're waiting to see what happens under this new administration. And the market doesn't care, folks. The market's going to do what it does. The policies of President Trump, of President Biden, they're certainly going to impact things at the margin. But at the end of the day, the flow of money and the overall investor sentiment is what's going to drive trade. So I would encourage folks, don't make any huge aggressive moves right now. Stay calm. Let this reopening happen. If you've got opportunities for your operation that might be limited profitability in new crop corn and beans, for example, grab them, take advantage of them, but don't sell the farm tomorrow. Don't go in and buy a new farm tomorrow anticipating these rallies are going to continue. Sit tight. Preserve some cash. We're going to have a lot of opportunity going forward in 2021. It's going to be a tough slog, and I think we're going to see a lot of head fakes before we figure out where this market, where this economy, where this country is going post-COVID, Jesse.
Well, Mike, I know you're very active on Twitter. Folks can follow you there. Pearson Cattle is your Twitter handle. And, of course, spent some time as a guest co-host on This Week in Agribusiness. And, as always, it's great to talk to you. It's been a while since you and I got a chance to chat, but I really appreciate the time and your insight on the markets today, Mike.
Jesse, really glad you're doing Market Talk. Glad you're getting this conversation out there to the producers. And thanks so much for having me on.
Yeah, we'll have to have you back again sometime soon, my friend.
Anytime. Take care.
Mike Pearson joining us today here on Market Talk. That's going to do it for our Friday, January 29th edition of the show. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great weekend.